you saw the bounce off of those lows. You are saying we may or may not test them. What is your gut telling you? That do we just churn here somewhere up a little bit, or do we go to new lows?
I don't think we go to new lows, Joe. I think the market has found a bottom, and I think as we start the economy to restart again, we will see demand come back. And I think we have to get through really earnings season for the next, at least this quarter, if not next. And some of the things that are going to throw the market off are exactly what you just talked about with oil. There are going to be some unintended consequences. There are going to be some players caught off sides, and I think that's going to throw the market a little bit off as well. But fundamentally, you have the Fed, you have the Treasury behind corporate America. You also have the government kind of looking to corporations to say, we'll get you through until demand comes back. So we are looking at this as, hey, opportunities in your portfolio, kind of barbell, get the good quality companies that have become much cheaper. You know, in financials, it could be the JP Morgans, Bank of America's, Blackstone's. You can buy healthcare like CVS, home products like Lowe's, and I think you can add to your portfolio with really good companies. But at the same time, I think, the volatility is here to stay for a while. Things like oil going negative. You're going to hear from consumer staple companies like Coke talking about on-premise that has just dropped completely. So there are opportunities there as well. We like Pepsi. We talked about Coke just now. Coke is selling a lot of products at home, but Pepsi's also got a huge amount of products they sell right in snacks that come home, and that's really increasing. So look for those type of opportunities where I think there's going to be secular growth. We like 5G. In the 5G area, you've got Qualcomm, American Tower, companies that are going to grow through this. So there will be opportunities. Balance sheets are going to be really important, especially for those companies that I think have to survive and come through this. If you've got a junk balance sheet, that's going to be a little harder. You don't have the Fed behind you on those. So
Sarat, if you had money, I don't know, maybe you didn't like the market 3 months ago, or maybe you sold something, when we bounced. Would you buy all those companies today? Would you buy a half a position in all those companies you just mentioned today? Or would you?
I would.
A full position, half position? How would you do it? You think even today you could be buying?
A very good question. So if I didn't have any money in the market, I would start with 0.5% positions in all those companies. To us, those are core companies that you want to hold in your portfolio. Market could definitely go down 10, 15% from here. But that doesn't necessarily mean all these companies are going to go down to, Joe. The market itself is also being carried by a bunch of stocks. I mean, the NASDAQ is doing really well. If you look at the big boys, the Amazons, Microsofts of the world, they're all up for the year. I mean, 10 stocks have carried about a third of this movement from the bottom. So you really have to dig deep and say, hey, when I look at financials, they're down about 30% for the year. If I look at industrials, they're down close to 30%. Some of these other stocks are down 15 to 50%. So let me see which ones I can start nibbling on now. And if we get, this pullback for whatever reasons, unintended consequences, earnings are much more dire, they're not going to be good. I mean, if Coke can't tell you what they're going to project, just think about other companies that are in industrial sector, transportation sector. It's going to be pretty ugly. It's a sustaining duration that we're looking for. And if you're going to be an investor and you're going to go look out and you have hope, and we do, look, we're going to come back. And when we come back, we'll come back really strong. It'll be bumps along the way, no question. Nobody's talking about a straight line. But a year from now, 2 years from now, you're going to be happy owning some of these really high quality global companies based here in the U.S.
Hey, Santoli, could you foresee we saw the lows, right? And then we've been up 30% off the lows. In your gut, do you think for the next 3 months we just stay somewhere in between those two? Is that possible, or do you think that's unlikely? Do you think either we go below or we actually go above? I guess, that's a ridiculous.
I think it's very possible.
That we just churn around. Yeah, we turn around in there.
Look, we talk about, are we going to go back to lows, or what's the ultimate time frame before we go back to the old highs? That's because they both happen so fast, right? So 4 weeks ago, we were at the lows. 4 weeks before that, we were at the highs. In normal times, we don't sit here really kicking around saying, so do you think the market's going to immediately go down 25% from Friday's close? Because that's a new low. down 25% from Friday's close, is going back to the lows that we were at 4 weeks ago. So I do think that we have to kind of step back and say it wouldn't be that strange if after regaining half of a huge crash-like move in the stock market, that usually means, by the way, that a low is in if you've gained more than 50% of that loss. But it doesn't mean that that's good things for the near term. You should probably back off, churn, test on some level. Test doesn't mean go back to the tick of the lows in the index. So I don't think it's implausible to think that we turn around. And Sarat mentioned this sort of bifurcation in the markets. That, on the one hand, says that the market is not saying everything's going to be great again in 2 months, and therefore the consumer is going to be roaring. Because if that were the case, we wouldn't just be buying Shopify, Amazon, Walmart, and Microsoft. Or you'd be buying Ford, which is at $5, a Whirlpool, and KeyBank, and that's not happening. So I think that bifurcation can work both ways, especially if those big growth stocks get tired, and that's the occasion for a choppy, churning testing period.
Right. So it's not. You don't go to that ship. What's it called? Ship slack. You don't go to that on up
well,
days.
Well, you're thinking of the word shiplap, which is a kind of wood siding.
So it's not correlated.
It's actually not that.
Not correlated to anything. It's just whatever you get up. I mean, do you move the pad cam?
You can try to write an algorithm, but I don't think it's going to work.